Hello and welcome to BQ Prime. You're watching Earnings with BQ, and our guest today is Mr. Jonathan Hunt, the MD and CEO of Syngene International. Welcome to the show, sir.
Nice to be with you.
So Syngene has had its revenues up 19%, net profits up 14%, however, slightly below estimates. There was an exceptional loss in the quarter. EBITDA in line with estimates, and the margins coming in at 29.9, almost in line with estimates. So you've had a good quarter.
Yeah, well, we think so. I mean, pretty much as we expected. We were looking forward to, I think, some good growth this year. We guided for that at the beginning of the year, and the first half and the second quarters pretty much turned out in line with those expectations. And I think quite nicely balanced actually across the business. As you know, the bulk of the business is in the research services side. We have a dedicated centers division. And then the newer part of the business is the development manufacturing space. And all four of those are performing pretty well.
So you've readjusted your guidance to mid-teens instead of high teens. And you've said that there's some slight softness on the US front in terms of the biotech funds that are coming in. I believe that's on the R&D side of your business, right?
Yeah, that's absolutely right. It's pretty much a segment and very, very clearly linked to the research services. It's those sort of PE and venture capital-backed startups. It's that part of it. The rest of the industry, actually, the demand's looking pretty healthy.
Then, so what sort of impact is it going to have on the growth? I mean, how long is this expected to stay? And what sort of revenues are going to get hurt in the process?
Yeah, well, I think the last of your questions, we sort of guided, softened a little bit the top line revenue growth for the year from high teens to mid-teens in a constant currency basis. That said, that's still pretty good growth. I think a mid-teens performance is pretty strong performance. It's certainly a market share gaining performance if we deliver that in the year. So we're outgrowing the industry we're in, and we're outgrowing many of our competitors with that level of performance. As for how long it lasts, I don't think it's completely clear yet. But what I do look at is some of the indicators. So if you look at the rate of new funding going into the US biotech segment, during the pandemic, of course, it was a once-in-a-lifetime high. There was an awful lot of capital went into the biotech sector, quite rightly, as people were looking for scientific solutions to the global pandemic. Over the last year, it's softened quite a lot. It's come down, and that seems to be stabilizing now around about pre-pandemic levels. So if that continues, I think this will be a temporary blip, maybe a quarter or two, but certainly I don't see it as a structural change.
So in the meantime, will that affect our business mix in the sense we were at 60-40? I think the target was 50-50 eventually. But is that going to happen sooner now with the funding gap?
Oh, I think that was a long-term target. That was playing out over multiple years rather than multiple months. So I'm sure there'll be some element there, but I don't think it's a material change.
And so in terms of our margin guidance, will it still stay at 30 or should we see some softness there as well?
I think we'll be around 30. I think there's enough levers you can pull just to juggle some of the discretionary expenditure to make sure we'll be there or thereabouts. So unchanged on that expectation.
So there's just one specific thing that I really want to understand. What is the next leg of growth for the company? We had the Zoetis deal, and next year onwards, I think we'll have Zoetis in the base. So what is it that will lead to the growth? Because I think in the current year, the shipment batches are going to keep giving us the growth. But what about the next year? And how do you plan to take this?
Yeah, sure. I mean, I'm not going to give you guidance for next year yet. We'll do that at the full year results. So we can talk about that of April of next year. More of the same. If you actually look, it's not, our growth is not contingent on a particular client win a particular program. We've got 450 plus active clients on any given day. We're fortunate enough that we have partnerships with 15 of the top 20 biopharma companies, many of the next 100 biggest biopharma companies. We've got exposure to the animal health industry where we're emerging as a leader. And we're seeing there that spans all bits of our value chain, from the discovery research to the dedicated centers to development and into manufacturing. So I think the growth comes from all of those rather than it being a single point outcome.
Sir, on the Stelis acquisition, we are expecting it to get done, I think, by the end of next quarter.
Yeah, I think that timing's about right. At the moment, we're doing all the sort of day-to-day operational things in a deal like that, checking closing conditions, making sure that everything's aligned. But so far, it's progressing well.
So what plans do we have in store for the facility? Because we had done a visit, you'd hosted the media for us. And during the visit, we were shown a facility which was entirely automated, in the sense, minimal human intervention. Sure. And are we planning to set up such a facility on a larger scale at the Stelis facility? That would, I think, minimize the US FDA impact. And that, to me, struck as a really good new thing in the whole of pharma space. So are we looking at something like that?
Yeah, that's actually the core for the whole business, is to make sure that we digitize and automate where we can, that we make sure that we put in the sort of very latest working processes. On the specifics of the Stelis plan, I think it'll take us a couple of quarters at least to put some further investment there. We've got some ambitious plans, very much in line with the things that you said about upgrading it, getting the facility to the standard we want. And that would then predict that we would be ready sort of for operations into the next financial year. But that's pretty much what we guided at the beginning of this.
So what is happening on the cost front? Are we seeing any pressures there also with the turmoil that's happening in the world in terms of all the geopolitical tensions? Are we seeing shipping rates go up again? What is your sense of what's happening on the ground?
Yeah, again, an awful lot of what we do, when we ship things, it's often an email file with data in there. It's not necessarily physical stock on the research side, because the core of that business is knowledge creation rather than necessarily something physical. So not particularly exposed to that. I think things like oil prices and that feeding through into input costs for people, clearly pressures on all businesses. We're in quite an interesting position. We took a decision a few years ago to really accelerate our investment in renewable power sources. And we're now at a position where something 75, 80% of all of the energy consumed across the entire business comes from renewable sources: wind, solar, a little bit of hydroelectric. So we're somewhat insulated from that. But in general, I think the environment for us looks reasonably stable, and we're operating under control in terms of costs.
Also, so now, if you were to give the outlook for the other half of the year, how do we expect the exports to happen? I mean, are we supposed to expect it to be as strong as we've seen in the past 2 quarters?
Well, no. I mean, if you take the implications of mid-teens growth for the full year, and having had 18.5%, 19% in the second quarter, you can triangulate into the maths. A little bit less growth, but still good growth in the second half of the year. I think the biggest impact will be in the third quarter, and then actually my expectations are a very strong exit to the year. Everything indicates so far that the fourth quarter may well be our biggest fourth quarter ever. So a little bit V-shaped, slowing down in the third, re-accelerating in the fourth, good exit to the year.
What exactly is happening in the fourth quarter?
If you look at particular sort of client projects, you can start to see a lot of delivery stacking up in that fourth quarter, particularly some of the development and manufacturing side of the business.
Okay, sir. Thank you so much. Looking forward, and all the best.
Thank you.